So I am with SunTrust Bank, and I'm a strategist with the bank. So this afternoon, welcome to Navigating a World Without Cash. So I'd love to see by a show of hands, who in here usually carries cash with them? Y'all are in the wrong session. I'm just teasing. You're all in the right session. So we have a moderator today, Sulaima Gurani, who is actually going to take us through some of that discussion with our team today, and that way we all talk through what does that look like for our society, what does that look like for us, what does that look like for all generations. She's actually the CEO of a fintech bank, Get Capital Aid. So please join me in a warm welcome.
Thank you so much, Christine, and thank you for pronouncing my name right, Sulaima, right? It's very exotic. First of all, I think it's a great pleasure for me to be in Atlanta. It's my first time here. I'm from Copenhagen. Thank you. It took me 40 hours to get here, so this is how you look like after 40 hours of traveling. I'm just saying. I need a shower, but I will take that afterwards. First of all, I'm from Copenhagen and Denmark. First of all, I moved to the US a year ago, I have to say that. To discuss inclusiveness and cashless society is for me something that I never thought about. Before I moved to US, I still don't carry cash, and people still remind me, remember to bring cash because we do tip people. But in Copenhagen, we don't tip people and we don't have cash. So I have to change my behavior. And we don't have poverty, and we are the most equal society in the world. So for me to moderate this debate is very interesting. And I'm proud, I'm out of myself, of happiness, to be moderating this amazing panel. First of all, help me to welcome Amy Circle. Yes, absolutely. She's actually the Vice President at Industry Affairs
at the Electronic Transactions.
And Vice President, my ladies and gentlemen, please make my words, Vice President. She's a payment technology expert. She's been in this industry for more than 30 years. So she has seen from the telecom to the mobility industry, the landscape, how it has changed. And she's been at 40 years at ETA.
Not 40 years.
14.
No, I've only been at ETA 2.5 years.
Oh,
prior to that was 14 years.
Good.
In the development.
Okay, but you have the experience equal to 14 years, so that's the thing. Yeah.
97.
And you also are an expert in Africa, right? So
I've spent a lot of time working around.
You know Africa, that's, yeah, I still get to, okay. So you're an expert in that. Why are you passionate about this cashless society and mobility and transformation?
Sure. Well, thank you, and thank you to Operation Hope and everyone for this wonderful opportunity. These last 2 days, it's like this wonderful family reunion you don't want to end. The sense of joy and people really passionate. You're all passionate about these issues, so it is energizing and contagious. So thank you to Operation Hope. ETA, and it's not Electran, it's the Electronic Transactions Association. We're a nonprofit trade association, and we represent the payments ecosystem. So our members include companies that are probably familiar, and some who may be residing in your wallet, Visa and MasterCard and American Express and Discover. But it also includes the payment processors, which you may not necessarily know about. We do a lot of the work up in Alpharetta and north of this beautiful city, or I guess it's part of the city. Apologies for any geographic confusion. But First Data and Vantiv and TSYS and Elavon and Global Payments, which is headquartered here. So payment processors. On top of that, we have a number of really important players, including Apple and Samsung and Google, and entities that really see the future as mobile and see the future really as mobile payments. And then other companies, of course, such as Amazon, you may have heard of them, security companies like Trustwave and others based here in Atlanta and around the world. We're a global association. And our goal and our members' goal and desire is to really eliminate cash and to encourage use of a variety of mechanisms and tools to enable commerce, to support the growth of economic markets, and to enable financial inclusion and to address the needs of unbanked and underbanked as well. A number of our members have initiatives. As I shared with Sulaima earlier, and I'm passionate about these issues because prior to ETA, I really had the opportunity to do a lot of work in the developing space around enabling technology to support growth of digital financial services, and that's really tied to financial inclusion and the changes are transformational around the world. And so I'm just excited to continue talking about why cash is dirty and big.
Thank you so much. And Amy is going to join one of the discussion tables afterwards, so cross your fingers that you get her at your table. Richard, when I read your bio, I was super impressed. You look very innocent with your tie and everything, but actually he knows everything what is going on in a criminal mind, right? He has been writing or co-authored more than 7 books on crime and criminals and armed robbery. I don't even have that word in my mouth because I'm from Denmark. Yeah, we don't have that. Anyway, drug dealers and whatever. You know that kind of thing that happens in the U.S. Yeah. I'm Danish, what can I say? But actually, you are the professor and chair of the Criminal Justice and Criminology at the Andrew Young School of Policy Studies at Georgia State University. Oh my goodness. That's the long version, right? Yeah, okay, but that's what you are. Tell me, Richard, you just did some really amazing research on the effect of declining. So Amy's very pro cashless society, right? You also looked at the research on the effect of declining the use of cash on street crime and drug-related death, right?
I did.
You did. And Richard, please share with us, because I find that fascinating. Why is it important to discuss cashless society now? And what is the advantages and disadvantages by going cashless when we look in terms of crime? And I think everyone in this room is concerned about the rate of crime, not only in the US, but worldwide. Can you please elaborate with us? Because it's very mind-blowing what you know on this.
Okay, well, first of all, it's great to be here, to be in this session, especially with my distinguished colleagues up here on the dais. My mother would be so impressed to see me talking to all these people.
We will take a photo.
It's exciting. I study what happens to crime in an increasingly cashless society, and the answer is that crime goes down. The street crime, especially, goes down. Now, that's important, and the reason it's important is because the poor are disproportionately victims of crime, and not only are they more likely to be victims, the consequences of that victimization for them are much more severe. So I've been concerned about what we might do about this. Now, one of the things I know from working with criminals for many, many years, or offenders for many, many years, is that the reason they commit crime isn't for money. Everyone thinks they commit crime for money. They don't commit crime for money, they commit crime for cash. And there's a difference, and there's a big difference. So I began to wonder what would happen if we replaced cash with some other financial vehicle. Now, I didn't know what that might be, but then the problem was kind of solved for me when I was living in Missouri at the time, and Missouri moved from issuing welfare checks to issuing them as debit cards. Now, welfare checks are concentrated in poor neighborhoods with high crime rates, so it's a good chance to see what happens during this changeover. And I did a sophisticated econometric analysis. Actually, I didn't do it. One of my friends said I couldn't begin to do it, but it was quite good. And what we showed was that crime dropped in those neighborhoods by about 10%. It's a massive crime drop when you think that individuals who suffer from crime really have all kinds of very negative impacts on their lives. So I'm kind of passionate about cashlessness. Now, that means that I know that cash is going to lead to a reduction in street crime, and I also know that at the same time street crime drops, as we move toward a cashless society, cyber crime is going to increase for all kinds of reasons. We might want to talk about that later on. I won't go on into it now. But I'm really passionate about that because I really want to see a mechanism put in place to protect the poor from crime, because the consequences for the poor are dramatic.
Thank you, Richard. You see what I said? Very fascinating. So you are very passionate about how to bring in the poor people in the new economy, right? To make sure that we can speed up and go forward and not leave anyone behind, right?
Absolutely.
That's the key.
Absolutely.
Thank you. Okay, Noro Mugambi, right? Kenya Bankers Association Director. No, yeah. How do you say that? Association. Exactly. Very difficult. Anyway, we got it. the good thing about not being able to say it is that I can say I speak 3 other languages, right? So that's a good thing. Okay, so you have really, can I say, if the first thing that comes to my mind is, you and I dislike banks, but we like money, right? Yeah, no, okay. I can say that. In terms of, we know and we understand that we need the banks, but we don't need the banks as much as the money, because after all the conversations we've had, it's clear to me that you are disrupting. You're helping the industry to disrupt itself, but you're also preparing someone to disrupt the industry. And you are from Kenya, and the things that you're very passionate about is sustainable finance, consumer protection. Because again, when we talk cashless society, think about the data you leave behind. Can you imagine one day you go to the doctor and he or she says, oh, you're buying too many cigarettes and too much whiskey these days? How do you feel about that? Because that's data that might be or might not be for sale, right? Think about it. Awful, no? So, and you also have some very concrete examples on how to build sustainable ecosystems within the financial industry, right?
Yes.
Take it from here.
Great, thanks. First of all, I'm not less.
No, we upgrade.
So I'm very happy to be here. Yes, my name is Lulu Mugambi. I have sustainable finance programs for Kenya's banking industry. Kenya is, just for those who might not know, Kenya is East Africa's mixed economy. We're also known for innovating in the space of mobile banking. Some of you might have heard of the product M-Pesa, which is really a case study in terms of mobile payment innovation. So my area of interest for the banking industry is really making banks more relevant to people like you. So how do we ensure that banks are responsive to social changes, environmental changes, recognizing that these changes actually impact on gross domestic product, and therefore it impacts on your assets, it impacts on your performance. So I lead the initiative that's looking at green finance, so looking at how banks are investing in the green economy, and also how banks are supporting small businesses. And this really is my passion, changing finance and financing changing.
Thank you so much. And you will also be sitting at a table afterwards. Thank you so much. Samira is Samira Fasili, yes. Senior Visiting Advisor to the Federal Reserve Bank of Atlantis Community and Economic Development.
Yes.
Right, good. So you are an expert in inclusive economic mobility for the Southeast, in the Southeast.
On economic mobility in the Southeast. and
Exactly,
inclusive growth.
yes. And 5 things that comes to my mind after we've talked together is inclusive economic growth is your passion, access to finance, very important, retirement, because in the US, apparently very different from Scandinavia, you don't have that in place already by the government. You know, I live in that free society where everything is for free. Paying 62% in tax. Yeah.
We all need to
Well,
come
you're
together.
right. So when I applied for my green card, the Homeland Security officer said, "Why are you moving from Denmark to US?" And but there's one thing I should say: pick your poison. You know, no country is perfect, so we have poison too. Anyway, consumer finance and microfinance. Just a very few things of all the things that you know something about. And you've also been a senior advisor to the White House, not for this government though, right? The previous one. And just saying, just to... I'll just leave that in the room, okay? We talked a lot about policies and not politics during the break, because there's a big difference here. Samira, and she's also co-chairing because I will be leaving for catching my next flight. So if I leave, she will stay. Okay, Samira, take it from here.
Okay, so I'm really excited about this topic because my work at the Federal Reserve Bank focuses on basically the frontiers of our economy and the frontiers of our financial system, and I'm always focused on where people aren't being served and how do we get people better served. What this conference always does a great job of highlighting is how people are not being properly served in our banking system as it exists today. And the great question that I'm excited about hearing all of you discuss, not us discuss, but you discuss, is where this mobile money, where cashless society is going to benefit you and where you think it's going to hurt you. I'll present just the small stats on the percent of our population that currently does not have access to banks is 7%. 7% considered unbanked by the latest FDIC numbers, and about 20% are underbanked, and that number has stayed pretty steady for many years now on the 20% side. And the question remains whether mobile payments or cashless society or new payment systems can actually improve financial inclusion for some way. Some people see a lot of room for optimism there because the Federal Reserve does a survey also on mobile payments, mobile usage in the mobile financial services. And in our last survey, of the unbanked people who were surveyed, 40% of them had access to a smartphone. And it's not that all of them were actually using their smartphone for transactions, but there's this question of, wow, phones and mobile devices are penetrating parts of the population that banking has never been able to reach. We also, at the same time, are seeing such a technological revolution finally hit banking and financial services, and it's uncertain whether the benefits and costs, what are the benefits and costs of these changes. FinTech is putting a lot of competitive pressures on banks and established firms to change their behaviors, change their products. It's very competitive in terms of speed, convenience, price, and customer experience. A lot of people are hoping that there will be opportunities for partnership and collaboration between banks and FinTech, so they can reach a wide variety of customers and markets and consumer segments. But we regulators, what I hope you bear in mind in the conversation is how we regulators think about this, us policymakers. Because we are unfortunately always charged with applying yesterday's laws to tomorrow's technologies. And so we're going to have to take our existing frameworks and apply it, and there will be winners and losers in that. We're always trying to balance permitting well-rounded innovation to develop while we appropriately address the risks. And I'd love to hear what people think some of those risks are. What are the risks to your privacy? Who do you think should own your data? Who should be able to make money off that data? How do you enforce those rights? And, Richard is really put it as like criminals. I mean, a lot of our job as regulators is to help manage criminal activities in the financial system. Well, as criminal activity shifts to cyber criminals, like how do any of us control this anymore and all these data breaches we hear about in the media? These are all questions our policymakers are going to be wrestling with as these innovations are coming into the system and disrupting things. And I'll close out, if I just have one more minute to say, I'm excited that we have Nuru here with us because so much of the innovation internationally is leap years ahead of where we are in the US on these issues. But our banking system is really unique compared to other systems around the world because we have a lot more banks and we have a very fragmented, what they call regulatory structure, regulatory environment. Each state has a state banking agency that can apply banking laws. You have the FDIC, with the Federal Reserve at the federal level, and now the Consumer Finance Bureau and the OCC. Each of us have overlapping jurisdiction over a lot of the banking system, the financial system. And so innovation can sometimes be very slow to happen in our system here because you have to talk to 50 plus different regulators trying to do anything new and have all of them sign off on it, let alone talking to the legislatures to get the law changed. We're usually just playing with existing regulation and looking at our existing authorities. So I throw that out there to help you think about what else regulators think about. We think about privacy, we think about property rights, we think about security, and we think about discrimination. Because a lot of our banking laws also have an anti-discrimination overlay in them. And when you talk about cashless societies, cashless transactions and cashless and move to cashless society, there's a lot of data that's going to be there. Well, what's that data going to be used for? How do we do what you want that data?
Thank you so much. Should we welcome her?
Yeah. And I would join our table too.
Yes, and you will join the table too. And so, as you see, it's a very impressive panel. And since I like to have a dialogue, and if you have any questions, just raise your hand. I will love to bring your question forward. Meanwhile, you're thinking, yeah. Meanwhile, you're thinking. I'm happy that you mentioned the American system because I'm new to the system, so I still wonder, right? And 6 months ago, I was asked to sign my first check in my life. I had to Google how to sign a check, you know. I'm very impressed that you still use checks here. When you talk about cashless society, 5 things comes to mind. A lot of people are asking, why is Scandinavia? I mean, Germany is different. They still like cash, but it's part of the World War II history. They don't like to leave data behind. They don't want it to be used for evil purpose. The data, not the money. I believe they buy expensive cars for the money, but they don't want to have any data on it. The thing is, we need to trust the government. It's number one. You have to trust your government in order to go cashless. You have to understand that we have no corruption at all in Denmark, and maybe that's part of the cashless society. And we're equal, and we trust each other, and it's digital. Everything is digital. So that's how Scandinavia is. But you are from all different countries. Most of you are probably from US, but I guess that a lot of other countries are represented. I know Sweden is down here somewhere. Yes, so hello, brother. But again, why is this so important? I mean, why can't we just wait another 5 years to discuss this? Why is this so urgent right now? Could you just take 30 seconds each to just discuss why do we need to have cashless society on the agenda this year? Let's go. Yeah, please. Amy?
So, one question I have. So, I'm assuming everybody in the room has one of these. It doesn't have to be Apple. But is there anyone here that doesn't have a smartphone? It doesn't have to be Apple. Or Google.
It can be a
an
smartphone.
LG. It could be. I'm not plugging. But is there anyone here that doesn't have something in their possession? It's like maybe an old flip phone or slider. I mean, this in and of itself, I think this is becoming, and I guess that's what we all expected, this is a computer, and it's becoming a device by which we're all kind of building our lives around. And that's good and that's bad. And Samira talked a little bit about the bad, sure. On the one hand, every time you put your finger here to authenticate, I sometimes get a little like, okay. But yet this morning, that the magnificent CEO of MasterCard, who happens to be, MasterCard is an ETA member, and MasterCard is doing some tremendous things around the world addressing financial inclusion in really critical markets. And he talked about the need for identification as part of the inclusion piece. And noticing the point about biometric authentication, so whether it's a footprint, a fingerprint, a retinal scan, that's part of addressing the financial inclusion piece. And the mobile payment piece is certainly a key element of that as well.
But Amy, what if you don't? I mean, a lot of people cannot. I mean, in here we all have an iPhone. I think poverty to us is if you can't afford a new iPhone, right? But I think a lot of people don't have an iPhone.
Right.
I mean, inclusiveness is also about really empowering the really poor people.
Correct. And I think one of the things that we're trying to see accomplished is with a digital device is to facilitate and enable use of mobile payments, to foster that, and it doesn't have to be the latest device, or whether it's something as simple as a prepaid card. A number of our members are very active in the prepaid space. So whether it's a general purpose reloadable prepaid card, or whether it's a closed loop prepaid card, those kinds of mechanisms and those tools driven by technology should filter down to enable and facilitate the broadest means for financial
So that's
inclusion.
your sense of urgency now. Nuro, you have
It's
been.
leveraging the technology.
Good.
Because and we sort of have to leap on it as we can, because the other key issue is, no offense to the regulators,
Yeah.
because I think very highly of the Fed, I do, I really do. But the technology will far surpass
Yeah.
any regulatory. I mean, regulatory lag really does exist, and you guys know it. But so trying to kind of leverage the technology while it's present in the market.
Thank you, Amy. Nuro.
Sure, yes. So from my perspective, the cost of cash is something that the MasterCard CEO talked about this morning. There are estimates that the cost of cash is 1.5% of our gross domestic product for emerging markets. So therefore, if we're really struggling with economic development, we can't afford a 1.5% some hit on our economic production. So it's very important that we limit the friction and increase the velocity of how money moves in the system. And then also there's the issue around wealth creation and economic empowerment. So we found through mobile banking and through leveraging off the M-Pesa framework, there's been a lot of innovation. And you're finding the fact that you have convenience in moving your money across the country. People are finding opportunities to trade more. People are finding opportunities to get into small business and do living easy. So what you then start having is ecosystems building across the country. So you have a decentralized economy because of technology. And that's a good thing, because now you no longer have to travel to states to transact. You don't have to travel states to access the market.
Can I challenge you a little bit on this?
Sure.
This might be different from the Nordics, but in terms of using technology more and mobile payments and so forth, we've seen that people are spending more money, right? Spending is not always good, right? It puts you into debt. And the kids no longer understand the value of money. Okay? You see, there's number one. I have a son, and when I was at his age, he's 9, I would be going to the grocery shop for my mom. I would have a note, bring this and bring that, and I would know the price of a milk, right? My son doesn't even know we pay for milk, right? So I think he thinks it comes out for free. I don't know.
So I see it as
I'm just saying, yeah.
I see it as a first world problem.
Absolutely, but
So there are first world problems and there are third world problems. And if you look at how much money is moving on the mobile banking system in Kenya, for example, we're talking about 10 billion US dollars per quarter moving, and that's not just movie tickets. That's actual economic production that's happening. That's somebody who's buying tomatoes at 3 o'clock in the morning on her phone, so she can deliver them to a market at 6 o'clock, so somebody else can sell. So it's not just consumption, it's actually productive economic activity. At least that's been the Kenyan experience.
good. We need to have that perspective too. That's why we're so happy to have you here. Richard, what do you think? Why is it important now to discuss it? Why don't we just relax and see a movie and wait a few years?
Well, a few things. For me, it's not really a question of, will we or should we have a cashless society. We're on the way to having a cashless society. It's going to be, it's going to be a story that really encapsulates this. In 1996, I just finished a study of robbery, and I got thinking, maybe what we need to attack robbery is just to get people to stop carrying cash. I presented that idea in Washington, D.C. at the U.S. National Institute of Justice. The director of our life in Nova Scotia to this day laughed me out of the room. Said, we're not going to have a cashless society. And so I think it's just not a question. We're going to have a cashless society. The question is, how are we going to cope with the problems that throws up? There are going to be many advantages. I'm interested in the advantages of crime prevention. But we're not going to, this is not a train we're going to stop. It's a worldwide phenomenon. It's what we need to get ahead of this now, learn to understand where the problems are, make sure people aren't left out. We need to really begin to do this in a serious way. I'm really passionate about this. People often say, or criticize me for a lot as being an advocate for the cashless society. I'm really not an advocate for the cashless society. I'm just here to tell you, it's on the way. We're not going to avoid it. And we need to begin to grapple with what that means. And I think we have examples all over the world now. We need to begin to get to grips with this. That's why I'm passionate about it now, because it's not going away.
You're on fire, Richard. We can tell.
And so I'm a little bit more cynical on some of that. I agree a lot with what Richard said, but I don't believe we're ever going to get to a truly cashless frontier. I think that we always, especially here in the United States, we still have a problem with the unbanked and the underbanked, right? We always have people who like to be served in a different way or who have different needs that may not be met by a truly cashless environment, and we have to figure out how to make sure all needs are being met in the appropriate way. But I would say part of the urgency for us in the U.S. to start getting ahead of this is the fact that other parts of the world are moving much faster on this. And the financial services world is truly a global world, and so firms are innovating all over the world and want to bring those innovations here. And so we are going to be forced to address these things, and it's important to get ahead of the questions now.
I think Samira raises an important point because this tension between the market and the regulators is a real thing. And I tend to agree that we might not get, well, maybe in a few years. I mean, if we're going to Mars, I'm sure we're going to be cashless. But it just depends on how, you know, because I don't think they're going to use cash in Mars. So I think it's just a matter of time. But the journey is from cash to cash light to cashless. And in some ecosystems, it will truly be cashless. Like if you look at the transportation economy. But other ecosystems, cash is still relevant. And what we found that the role of the regulator and the comfort of the regulator is the most important thing if you're going to move and advance a cashless economy. So in Kenya, for example, you have a product that started as a grant from the UK government to Vodafone, and it was a CSR project. M-Pesa was a CSR project. And the governor, the central bank governor at the time, who I guess is your Fed chief, like equal, he thought it was interesting, and he said, okay, you guys just go play in the sandbox, see if it works, and I'll just kind of watch and let you innovate, and if I need to step in, I'll step in. And I think it's important that regulators have that kind of millennial mindset to let industry create, but at the same time just let them play within the confines of comfort in terms of risk management, fiduciary duty and all that. But M-Pesa would never have seen the light of day if a regulator had the mindset that we can't do this. And a lot of countries come to Kenya to study the M-Pesa model. Many regulators leave saying this will never happen in my country, but others leave saying, okay, if you look at the fact that this will move financial inclusion rates from here to here. So right now, Kenya's financial inclusion rate is 74%. If you look at bigger economies like Nigeria and Egypt is 50% because they've not adopted a digital economy. So there are trade-offs in anything, especially in the financial sector. So it's just about, I think, collaboration, understanding, and just really defining and understanding what the risk is and pricing it.
And some of it too speaks to, in terms of a different kind of regulatory model. And as Samira was talking about, in the US, you've got state bank regulators, you've got a large chunk of federal regulators. And what's happening in a number of markets outside of Kenya, but where there's more collaboration between the central bank and, for example, the telecom regulator, where they sort of say, okay, if this is going to be, not this one, but something like this, a digital device will be a driver. The telecom regulators outside the US and certainly in the developing marketplace are very concerned about ensuring that they even have the ability to deploy sufficient spectrum and network availability, and that the network is reliable and trustworthy, and that it works when it's supposed to work. But the banking regulators have always held so close to the provisioning of financial services, and so what you're starting to see is the ability to, dare I say, collaborate or cooperate or to communicate around what needs to happen in those markets to ensure the deployment of financial services for financial inclusion. And in Tanzania, there was tremendous work done by the central bank and the telecom regulator to say, okay, here's your portfolio, here's ours, what can we do together for the benefit of our citizens? And in the US, I mean, parts of the government don't talk to each other, so I don't know if we would ever see that kind of a collaborative.
Yeah. We just have 2 minutes left, so please, just 1 second. Could you just do your closing remarks on just a little bit on this, what we've been talking about, and then we just take all of us, and then it's up to you to do the next part of it. But closing, your thoughts about this. What do you want to leave? What do you want to leave behind in this discussion?
I want to have you guys think about. Salima talked about trust, and you need to have a high level of trust in somebody in government if you're going to move to cashless. They all just threw their arrows at me, and they were like, "You regulated that," but fair enough. I'm not going to be like, "I know we're not perfect." I want you to think about who do you trust? Who do you trust to help oversee and manage the system? Because what we worry about as regulators is when innovation happens, in an unregulated space. Like when you think about the financial crisis that happened in 2008, a lot of that innovation was happening outside of the regulated financial system, not in the person we actually trust, oversee, and manage. So there are real risks that can build up in a system when innovation occurs. It doesn't have to be regulated by us banks. In other countries, it was a telecom regulator that was the main overseer of the move to mobile. So who do you trust?
Who do you trust, Samira? Very good question. Nuro, one thing you want to leave behind?
I think from the Kenya example, the lesson that we have is that for innovation to be truly sustainable and transformational, it has to be based on need. So for us, mobile banking is an innovation that was based on need. Again, remember the lady with tomatoes. She needs to buy tomatoes every day, get to market every day, sell it by 8 o'clock because she has to take her kids to school. So for it to be sustainable, for it to transform, it has to be based on need. And that's why American Online is not around today, because it was an innovation at the time, an internet innovation. American Online, to some of you, are we all too young?
No.
To know about it? Some of us don't even know about American Online. AOL. All right.
Okay.
So AOL is not around today because they were innovative, but they were not based on need. So the digital economy, the cashless system, a lot of the innovation that happens, the policy that happens, it has to be grounded on this issue of addressing the need.
So the future of money depending on need. Richard, what do you want to leave behind?
Reducing the use of cash to protect the poor from credit organization. I don't think there's any doubt about that. It will also probably increase cybercrime. In that sense, it will serve to democratize victimization. By that I mean that no longer will just simply the poor be being subject to crime. I mean, at the moment they suffer very disproportionately. As we move to cybercrime, we'll democratize it. That makes me optimistic, because I think that once other people are being victimized by crime, they're going to be much more serious effort to do something about it. And that makes me happy and optimistic about the future. The question I think for everybody here is, are you going to tolerate that? Because that's going to be the consequence. That's going to be what happens.
Amy, one last thing.
Oh my goodness. I would echo what several of the panelists have said. The cash we've already heard is not free, it's risky. I think technology offers wonderful solutions and alternatives to consider. And in terms of enabling transparency and equity in the marketplace. That, at the end of the day, is what we're trying to do, is sort of create a bit more of a level playing field, perhaps. And to explore and consider what those options may be.
Samira, Nura, Richard, and Amy, give them a warm hand for their vision.
Thank you.